Good evening, Chartereds. How are you all? We had started with accounting standards and some basic theory we had done, introduction to accounting standards, applicability of accounting standards. Correct and correct. Yes, no. Today we'll start with AS1. Are you all able to hear me? Bolo na. Yes, no. Yes, sir. Now, yes, yes. Now, Chartered. First one was introduction, lot of theory. Second one was applicability, lot of theory. AS1, majority theory. Then AS2 say your life will become little better. But all these are required for examination. We should do, we should not do. We should do. Now Chartered, this is AS1 ka sheet. Correct? Then you have got questions. Then we have got question. Then we have got question. And then we have got two questions along with solution. Correct? And that is how entire AS1 is there. Nothing more, nothing less to be studied. Correct? Now Chartered, फटाफट let's decide what is AS1. AS1 का heading is Chartered disclosure of accounting policies. Disclosure of accounting policies. Now my wonderful chartered accountant screen is not clear. 1 minute. To you it is not clear, or for others it is clear? Clear, sir. Yes. Then I don't think so. The problem is from my end. Now, disclosure of accounting policies. Now, Chartered, what is disclosure of accounting policies? As soon as you hear this name, no, disclosure of accounting policies, you feel this standard would talk about where accounting policies is to be disclosed, correct? Or rather, it would talk about accounting policies and its disclosure. Fair enough. Now, Chartered, let's twist the game little. Instead of disclosure of accounting policies, if I tell this, that this standard ka name should have been, who am I to decide the name, but still, financial statements or introduction to financial statements, then it would have been a wonderful idea. For example, I'll tell you. Tell me financial statement. How many financial statements you know? 5. Correct? One is balance sheet, PL, cash flow statement, notes to account, statement of changes in equity. Correct? Balance sheet, PL, cash flow statement, notes to accounts, and statement showing changes in equity. Now my chartered accountants, these five financial statements put together is known as GPFS. I do not call it GPFS, standard calls it GPFS. General Purpose Financial Statement. Am I clear? These 5 statements put together is known as General Purpose Financial Statement. How many financial statements are there? 5. Now, when you are preparing GPFS, chartered, you are supposed to keep 2 things in mind. When you are preparing GPFS, how many things you are supposed to keep in mind? 2. One is accounting policies, and the other is fundamental accounting assumption. Fundamental accounting assumptions. Accounting policies and fundamental accounting assumption. Now chatted, first let us understand what is accounting policy, then we'll go to fundamental accounting assumptions, correct? Now tell me one thing, if anybody asks you what is accounting policy, will you be able to answer? Sir, what sir? Anything you do in accounting is accounting policy only. No sir, method of doing accounting in a certain way is an accounting policy. Now let me tell you what does the standard say. Then we'll come back to common sense. Am I clear? Standard says accounting policies are specific accounting principles. Accounting policies are specific accounting principles and methods of applying those principles. It's a combination of two things. Number one, it's a specific accounting principles and method of applying those principles is known as accounting policy. Specific accounting principle. Now chatted, you have a problem and you have a solution, correct? You have a problem, you have a solution. Now when I say accounting principles, these are issues or problems in accounting. For example, how to value fixed assets is a problem. How to value inventory is a problem. How to account for foreign exchange is a problem. How to account for employee benefits is a problem. How to account for government grant is a problem. These are known as accounting principles. How to account for PPE, that is how to value PPE, that is fixed assets. That means valuation of PPE, the accounting principle. How to value how to value inventory, that means inventory valuation is a principle. Method of applying those principles, that means PP can be valued at cost or market value. Sir, PP should always be valued at cost. Yes, we have got cost model also, but we have got market value ke liye we have got revaluation model also, no? So PP can be valued at cost model or evaluation model. Inventory can be valued at sir LIFO, no. FIFO, हाँ. And VAM, yes or no? Yes. So chatted, this is the issue. Valuation or valuation of PPE. Second is valuation of inventory. This is issue. Method to solve this issue is known as accounting policy. So these are accounting principles. Method to solve accounting principles are known as accounting policy. I hope you understood. Now chatted, depreciation. Depreciation. How to calculate depreciation, how to account for depreciation is accounting principle. But depreciation can be accounted on reducing balance method or straight line method is a matter of accounting policy. Am I clear? So there is an accounting issue and there is a solution to it. That accounting issue is known as accounting principle and the solution to it is known as accounting policy. Am I clear? Yes, no, yes. So what is accounting policies? Accounting policies are specific accounting principles and method of applying those principles. So valuation of a PP is accounting principle and cost model accounting policy. Valuation of inventory is accounting principle and FIFO is the accounting policy. Am I clear? Yes, no. Foreign currency transaction is the issue. It should be recorded at spot rate. It is our policy. Am I clear? So I hope you understood what is accounting policy. As soon as you come to know what is accounting policy, am I clear? Anybody, any doubt till here? Yes or no? Sir, all these things are important. If it is not important, why will we do it in class? First reason. These are the basic things. When in future, when I say accounting policy, the standard refers to accounting policy. Beta, you need to remember everything. And as I told you in the first lecture, you will have only 4 chapters and too many accounting standards. So little bit of theoretical intake and their application will really help you, believe me. Now, started. Now, so you understood what is accounting policy. It is accounting principle plus method of accounting applying a specific accounting principle plus method of applying those principles is known as accounting policy. Now, when we are choosing an accounting policy, what factors are to be considered? When we are choosing accounting policy, that for valuation of inventory, this accounting policy we will choose. For valuation of PP, this accounting policy we will choose. So when we are choosing an accounting policy, we are supposed to keep factors in mind. What are the factors which we are supposed to keep in mind when we are choosing accounting policy? One is known as primary factors, the other is known as secondary factors. One is known as primary factor, the other is known as secondary factor. Now charted. Primary factor mean it is only one thing, that when you are choosing accounting policy, make sure it gives you true and fair view. It gives us true and fair view. For example, I've got a projector. You know what is projector? Yes sir, projector humko malum. We know what does projector mean. Now there was a chartered accountant who was charging depreciation on projector under straight line method. Who was charging depreciation on projector under straight line method. That means he assumed its life is 5 years, scrap value is this much, and after 5 years it would be sold for this much, that is its scrap value, correct? So there was a person who decided its cost, its scrap value divided by life, it started charging depreciation. Now chartered, due to some differences of opinion, I changed my chartered accountant. Due to some differences of opinion, I changed my chartered accountant. The new chartered accountant came. He told Dipesh, hey Dipesh, projector ka method of depreciation which you are using is not correct. I told, means? Well, a projector is dependent on life of bulb inside. And life of bulb is expressed in hours, say 3000 hours. That means you should have charged depreciation on machine hour rate method rather than straight line method based on years. Now tell me honestly, chartered, if projector ka life is based on hours, then should I charge depreciation based on hours or should I charge depreciation based on years? Tell no please. Hours. Correct. So now tell me, for true and fair view, I should have charged depreciation on machine hour. So the accounting policy which I should choose should be based on hours. Then only it will give me true and fair picture. Correct, incorrect, correct. Now chartered, I am dealing in perishable items. I am dealing in perishable items. That is fruits, vegetables, are those commodities which will get perished in the near future. Food items basically. Now, chartered accountant A uses weighted average method of valuation. Chartered accountant B uses FIFO method of valuation. Tell me, my wonderful chartered accountants, if you are a chartered accountant, which method you would have followed and why? Sir, I would have followed whatever you would have told. I would not apply my mind only. In Swami, perishable item. Tell me, weighted average method or first in first out method more suits your business? Weighted average method or first in, first out. Which FIFO, wonderful Rupa, FIFO method. Because in case of perishable, you should use FIFO, not weighted average method. That means it should give you true and fair view. Second, whenever you are choosing an accounting policy, you are supposed to keep secondary factors. Secondary factors may three things: prudence, substance over form, and materiality. Prudence, substance over form, and materiality. Prudence, everybody knows that one should account for future expected losses, but one should not account for future expected gains. I have not given the definition over here because I am 100% sure everybody knows about this. What is prudence or conservatism principle? One can account for future expected losses, but one cannot account for future expected gains. For example, I have got debtors of 50,000. I feel 5,000 ka debtors will not give me money. Can I create provision for doubtful debts for future loss? Yes, sir. You can definitely create. But I have got creditors of rupees 50,000. I feel one of the creditors will die, will leave the country, will not ask 5,000 from me. Can I create provision for discount on creditors? No. So, provision for discount on debtors is an accounting policy which follows prudence. But provision for discount on creditors or provision for deficiency is an accounting policy. But does it follow prudence? No. Can I use this? That is why in your childhood also I am sure the teachers would have told you, nah beta, nah, you cannot create provision for discount on creditors. Correct? Incorrect? Correct. FIFO. FIFO method, as if not used within the time, it would incur loss. Correct. Safe. FIFO for perishable. Oh bhai. FIFO. Now, so I hope you understood this. Now suppose plant and machinery 20,000. When I say plant and machinery 20,000, that means I will charge depreciation, suppose 2,000, I will call it 18,000. Can I say 20,000, appreciation 2,000, show it at 22, and 2,000 I charge it to PL credit by appreciation 2,000. Can I charge plant and machinery पे 2,000 appreciation and charge it to PL credit? Bolo yes or no? No. Why? Because this is an expected loss, depreciation, but appreciation means I am expecting that 20,000 ka plant and machinery will give me a benefit of 22. 2,000 is appreciation. Can I follow this accounting policy? There is a court case going on. मतलब क्या हुआ था ना? One student was talking too much in the. मेरा दिमाग गर्म हो गया. I got angry. I gave him one tight slap. As soon as I gave him one tight slap, he told me, "Sir, you don't know me, sir. You have to pay 10,000 rupees for this slap. I'll file a suit against this, or I'll file suit against you for slapping me." I got further angry. I gave him two more slaps and told, "Okay, take 30,000 from me. First go and file the suit." But I knew, I was confident that I will win this case. Before the case result came, 31st March came. If I win the case, I will get 30,000 from that student. If I win the case, I will get 30,000 and the probability of winning is more. Can I account for this 30,000 that there would be future inflow? No, Kaiku. Because exactly, you cannot account for anticipated losses. But my wonderful chartered accountants, everybody is telling no, super. But suppose there were heavy chances that I would lose the case. Can I create a provision of 30,000? saying that the chances of losing are very high. He is a son of some minister. So chances of losing are very high and I have to pay 30,000. Should I create a provision? Bolo, bolo. And the answer is no. Jain Swami. Yes. Ta. Kushi. Jairam. Could you change the meeting group chat? How to change? What shall I do? Yes. Meeting group chat. Okay, I've done meeting group chat. Now, another instance I'll give you. Now, I have a car. Correct. Car I was riding. Suddenly, while riding, instead of looking straight, due to some XYZ reasons, I looked here, came back here. Without realizing, I hit the divider. My car got damaged. Did I have the insurance? Yes. Correct. I knew whatever is the damage, that much insurance I'll get because the entire car was insured. I went to the mechanic, car garage, and the garage wala told the expenses is around 20,000 rupees. And my car is worth 15 lakh rupees and 15 lakhs fully insured. Now tell me, chartered, will I get 5,000, 50,000 from the insurance company? Yes, I am sure I will get. Can I account for this 50,000 rupees? Insurance company has still not intimated anything. Bolo, bolo. Can I account for this 50,000 rupees? No, no, no. Kaiku, it will become contingent asset. I hope you understood the meaning of prudence. Substance over form. Substance over form means reality over legality. Substance over form means reality over legality. I'll give you, that means we are not always, listen to these 2-3 examples which I tell you very, very carefully. Substance over form mein we are looking over reality over legality. Am I clear? Now, there are certain things, I'll give you first very dumb example. Maybe your grandparents must have seen your grandfather, grandmother. Once go and ask them, Dadu, Dada, do you have marriage certificate? 99% chances are there that they will not have marriage certificate. Correct? But in the eyes of law, will they be considered married or not? They will be considered married. Why? Because in India, marriage certificate or registration of marriage is not necessary. If you also, even if you show ceremony ka photographs, that is accepted. Are you understanding? So, in quite a few cases, you will find that our parents also do not have marriage certificate. But ceremonies ka photographs are there. So, what is more important? Reality is more important, legality is more important. Reality is more. Now, chartered, another. This was dumb real life example. Now, let's come down to accounts. What happened? One fine morning, I woke up and God knows, I was feeling very happy. Since I was feeling very happy, I came out of the room. My better half, who has taken all the good things of my life, She was standing there. And मैं साला पागल. Without thinking anything, I asked her, ask whatever you want from me today. I am ready to gift you. And she understood. Dipesh is ready murga today. Let me cut it off. So she immediately, without taking a second, she told, I want Activa. Correct? I said, हाँ. Now chatted, situation 1. I told, don't worry, I'll get the Activa. I went to the Activa ka showroom. I asked Activa how much. This is not today's story, so old story. The price would be old. Don't take it otherwise. So I asked, went to the showroom. I decided one Activa, black color ka. And he told me 60,000. I want Activa now. Now to you cannot get. Earliest you can get is after 2 days because registration, this, that. No, nothing listening. Today only I want. Today, now only if you want, you have to pay 65. मैंने कहा done. I gave that showroom 65,000. I came home. I was riding that Activa and coming. Suddenly, in the road, I met my friend. His name is Changu. Changu मिला मुझे, बोला दिपेश, new Activa. मैंने कहा हाँ. The puja you did. I hope you understand puja. We in India have a habit that when we buy a new vehicle, we do some puja. Correct? Yes. So I took that vehicle to the temple. Got the puja done. Should I do it? Yes, sir. So I got the puja done. I came back with that vehicle in my house, and as soon as my madam saw that vehicle, she said, how cute. And because of this, how cute, no. Entire life barbad. As soon as she saw the vehicle, she shouted how cute, and then she told Dipesh, I want pink seat cover. Imagine black Activa. Pink seat cover. Is that any combination? No. Will it look nice? But can I say that your choice is pathetic? Because I was also standing in front of her only. No? I am also her choice only. No? I did not say anything. Can I change the seat cover? Just tell me yes or no. Can I change the seat cover? Yes or no. In black Activa, can I put a pink seat cover? In black Activa, can I put a pink seat cover? No. Yes. Who will stop me? I went to the showroom, another showroom, seat cover ka showroom, pink color ka Activa de diya. She was very happy. Are you understanding? Yes, I paid full price, got the Activa, got the puja done, got back the Activa, got the pink seat cover, allowed, disallowed, allowed. Situation mein twist, kahani mein twist. Now listen, the same story. I woke up in the morning, asked my madam, what do you want? She told Activa. I went to the Activa showroom. Activa showroom, I decided the Activa 60,000 rupees. He was ready to give me today for 65,000 rupees, but I told I have only 10,000 rupees. I told that I have got only 10,000 rupees. He told doesn't matter. For next 9 months, can you give me 6,000 rupees? मैंने कहा definitely. 6 नहीं 7,000 rupees along with interest. I told definitely. So 63,000 EMI में. And he told papers will be transferred in your name after you make the payment of last installment. मैंने कहा done. So फटाफट I created all the PDC and gave it to him. फटाफट I created PDC and gave it. Now chatted, listen, I got the Activa, paid all the PDC, legally I will become the owner only on the payment of last installment. I took the Activa, was coming down. Now everybody has to give me the answer. When I took the Activa, I was coming down, I again met Changu. As soon as I met Changu, Changu told Dipesh, yeah. Now tell me, chatted, should I get the puja done or I should not get it done? Tell me, should I get the puja done or I should not get it done? Don't get it done. Chalo. I took the vehicle and got it done. Then again I got the Activa to my house. As soon as my madam saw, she shouted, oh, how cute. And after there is the same demand, change the seat cover, pink seat cover. Now tell me, chartered accountant, can I change the seat cover, yes or no? Changing of seat cover allowed, disallowed? Allowed. Can I change the seat cover? Yes. I change the seat cover, but tell me, am I the owner of the asset, legal owner of the asset? No, chartered. But still, can I change the seat cover? Yes. Why? I am the beneficial owner. Legally, I will become the owner on the payment of last installment. But can I change the seat cover? Yes. Can I do puja? Yes. Who will sit in the vehicle? I will decide. Bank will decide. I will decide. Where will I park the vehicle? I will decide. Bank will decide. I will decide. So can I say all the rights of ownership are with me and not with the bank? Can I say all the rights of ownership are with me and not with the bank? Yes. Am I the legal owner? No. Am I the beneficial owner? What is reality? Am I the owner? Yes. What is legality? Am I the owner? No. Should I show that activa in my balance sheet? Yes, no. Should I show that activa in my balance sheet? Yes or no? Yes. Is substance over form, reality over legality. And if you remember, on the first day I told, is ownership mandatory or control mandatory? Control is mandatory. Do I have control over activa? Yes. All future economic benefits will belong to me only? Yes. Therefore, chartered accountant, this activa will appear in my balance sheet although I am not the legal owner. They understood? Yes or no? Yes. Now, chartered, I'll give another example. See very carefully. एकदम सीए का बुद्धि. Can you see this phone? ये phone दिख रहा है? Yes. ये phone, you'll not be able to see, but there is a person called Changu in front of me. ठीक है ना? मेरे सामने एक आदमी है. One of you come over here. मेरे सामने एक आदमी है. अभी चंगू आएगा, आप देखोगे. कम कम कम. देखो, ये चंगू आपको दिख रहा है? ये चंगू है, दिख रहा है? ये चंगू को मैंने फोन दिया. क्या दिया? फोन. फोन उसके पास है एंड ही गेव मी 1 लाख रुपीज. अब 1 लाख रुपीज तो आई कैन नॉट ब्रिंग, बट ही गेव मी 1 लाख रुपीज एंड आई सोल्ड द फोन टू हिम. इज देयर एनी प्रॉब्लम? नो. अब ध्यान से देखना चार्टर्ड. 1 लाख रुपीज, इसको 1 लाख समझ लेते, ठीक है ना? ये बुक को 1 लाख समझ लेते. ही गेव मी 1 लाख रुपीज एंड आई सोल्ड द फोन टू हिम. After 1 year, I gave him 1,10,000. I gave him 1,10,000 and purchased the phone from him. That means first there was a sale, yes or no? Yes, sir. Then I purchased it back again, yes or no? Yes, sir. I sold it for how much? I sold it for 1 lakh. I repurchased it for 1,10,000. Everybody saw the transaction. Anybody has any doubt? Bolo yes or no? No. Thank you, Changu. Now tell me, everybody understood this, that this was normal purchase or sale? Yes, sir. But think, let's apply our buddhi. Somebody told me no. Who is that? Yes, sir. Everybody is telling me, sir, first you sold, then you purchase. First you sold, then you purchase. But tell me, chartered, apply your buddhi. Why will I do that? I will first sell the phone, get rupees 1 lakh. Correct. And after 1 year, I will purchase the same thing for 1,10,000. Why will I do this? Apply your buddhi and tell me. Legally, it is sale and purchase only. But apply your brain and tell me what is happening. यहाँ से तो आंसर आ गया. My champion sitting in front of me have given the answer. मेरे दूर के देशवासियों, भारत के, repurchase agreement. हाँ, repurchase. But why will I do this? Sell the phone, take back the same phone for 1,10,000. Will you do it? Am I allowed to take your names? Will you do it? Now, don't you think Maybe you didn't require it for the year and require it next year. And Swami, do you believe we are doing friendship, or you believe we are doing business? Now understand what is reality. I wanted a loan of 1 lakh. So I gave this phone as a security. Took 1 lakh. After 1 year, I returned the loan along with interest of 10,000. So I returned the loan and I got back my security. So can I say, which you can see as sale and repurchase, in reality, it was nothing but a loan arrangement. In paper, you will see what? Sale and purchase. But in reality, it was loan arrangement. Everybody understood, yes or no? No, matlab, abhay, you did not understand. That I gave it for how much? 1 lakh. Took it back. I gave 1 lakh. Sorry, I got 1 lakh, gave the phone. After 1 year, I purchased that same phone for 1 lakh 10. Am I nuts? Is anybody nuts? So it was nothing but a collateral security. Correct? Yes. Thank you so much. Now chartered. So you got 2 examples. One was hire purchase. That means when I purchase things on installment, legally I become the owner only on the payment of last installment. But I can show that asset in my balance sheet because I am not the legal owner, but control is with me. I am the beneficial owner. In the second case, if you look at the papers, it will seem what? Purchase and sale. Or third example देते हैं. सोचो चार्टर्ड. 31st March. Correct? This is the 31st of March. I wanted to purchase a property from you. Correct? Yes, sir. We had decided the price also. Yes, sir. But you were outstation. You were outside Bangalore. So you told me, Dipesh, I'll come back on 15th of April. And on 15th of April, we'll do the needful. I told, fair enough. This talk happened between us on 1st of March. Correct? 1st of March, everything was decided, the price of the property, everything decided. But all legalities will be done on 15th of April. Correct? Yes. Now, chartered, what happened? On 15th of March, I called you. You are a very good friend of mine. I told chartered. You told, ha. I told chartered, one favor I require. Bola, what? Give me this property ka possession on 25th of March only. Because 25th of March is a very auspicious date. I want to do puja. And I want to start staying from 25th of March only. But I will do all the paperwork on 15th of April after you come back. Are you understand? You told, Arey Dipesh, you are to my chaddi buddy. You do that. I will tell my staff to give you the keys. You clean it and start doing whatever you feel like. So I took the property on 25th of March. This is year 1, this is year 2. Correct? I started staying over here, puja done, everything done. You came on 15th of April. 15th of April ko paper, legal agreement and money is given. Now tell me, chartered, I will record this building in my balance sheet in year 1, year 2. Bola. Some are saying year 1, some are saying year 2, some are saying year. Now think, legality, reality. Reality mein, I became the owner on which date? Exactly, year 1. But legally, I became the owner on 15th of April. I will show it in my balance sheet in year 1, year 2, year 1. You understood substance over form. So you understood substance over form ka 3 brilliant example I gave. Number 1, hire purchase, where you become the legally owner of the asset only on the payment of last installment, but you will still treat that as your asset because the asset is within your control. Second is sale and repurchase. It looks like an agreement of sale and repurchase. but it is nothing but a loan arrangement. Third, legality is done after the year end, but possession of the property is taken before the year end. Legality is done after the year end, possession of the property is before the year end. I'll give you another example. With this you will understand very easily. Suppose your friend told, give me your Activa, or rather you wanted your friend's Activa. Your friend gave it to you for using it for 3 days. Correct? Yes, no. That Activa got damaged. You will pay the price, he will pay the price. Sir, I damaged it, I should pay the price. Exactly. That means for those 3 days you are considering yourself to be owner. All the responsibility lies with you. Yes or no? Yes, sir. So possession is more important, paper is more important. Possession is more. Am I clear? Yes. So you understood substance over form also. Materiality. Now chatted, does anybody know materiality? Year 1. Very good. Now chatted, materiality means what? 1 minute. AC को ठीक करो थोड़ा. Materiality means if the item is significant, then it should be disclosed, else it should not be disclosed. I'll give you some simple examples. You remember your 11th standard? When 49.3 used to come, no, used to shout, ma'am, this 49.3, we will show it as 49 or 50. Then your ma'am used to say 49. That means you used to ignore that 30 paisa, no? When you ignore that 30 paisa, why did you ignore that 30 paisa? That was significant or insignificant? Insignificant. It should be useful material to users of financial statements. Very good, Jairam. Now chartered, second I'll tell you. For me, it is 10,000 rupees. For you people, it might be 10,000 rupees. So if I buy anything of 10,000, I will show it as an asset. But if you buy anything of 10,000 rupees, you might just call it expenditure. Why? Because it is immaterial for you. ONGC का नाम सुना है? ONGC. Up to 5 lakh rupees का asset, they show it as an expenditure because 5 lakh rupees is immaterial for them. Can I do that? No. Why? Because for me 5 lakh rupees is too much. Oh, correct. Now chartered, I purchased this duster. This duster is 30 rupees. Correct? I purchased on 31st of March. So I have used it or not used it? Sir, not used it. So benefit is derived or yet to be derived? Sir, yet to be derived. If benefit is yet to be derived, chartered, tell me. I should show this as an asset or expenditure? I have purchased this duster on 31st of March. The value of this duster is 30 rupees. I have not used it for a single minute. So benefit is yet to be derived. Should I show it as an asset or expenditure? Bola bola. Asset, expenditure. Why expenditure? Materiality. 30 rupees ka duster, I will show it in the balance sheet and write 1 rupee 50 paisa depreciation. Ayyo Rama. Understood the meaning of materiality. All significant things should be shown. Technically it is an asset, yes. Benefit is yet to be derived. But 30 rupees ka asset. Then to 2 rupees ka eraser you have to show, no? Then to will go nuts like this. So materiality. All significant and material items should be disclosed, else it should not be disclosed. So whenever you are choosing an accounting policy, you are supposed to remember primary factors, secondary factors. You are supposed to remember primary factors, secondary factors. Primary factors are true and fair view. For that I gave you an example of projector, machinery. Secondary factors में 3. Prudence, account for future expected losses, not for future expected gains. Second, prudence. Second is substance over form. That is reality over legality. And third is materiality. Correct? Now, sir, you told us what is accounting policy. How do we select accounting policy? Sir, once we have selected the accounting policy, can we change? Sir, under any circumstances, we cannot change. So, there are exceptions to the rule, but generally you cannot change. Why? Because of consistency. Whatever accounting policy you have selected, you follow it consistently. Now, suppose you find me every day morning giving donation to somebody. So, you have a perception about me. Suddenly, one fine day, I start giving double the amount of donation. Don't you think you will think, kuch to garbad hai? My income has not changed. But you will think either my income has changed or there is some other good news because of which Dipesh is giving double donation. So suddenly if you change the accounting policy, then the financial information ka reading perspective will change. So you should not change. But that does not mean you cannot change. One fine day, I can change. Lottery lagi, I gave double donation. Allowed, disallowed? Allowed. Similarly, once accounting policy is selected, cannot be changed. It can be changed under three situations. Change in law. Company law change hogi. You are supposed to value property, plant and equipment under cost model only. Can I follow revaluation now? No. So, if there is a change in law, if there is a change in asset, if there is a change in AS says now no VAM, only FIFO. And I was following weighted average method. AS told only first in, first out method. Fair enough. Then, for better presentation, like I was following straight line method of depreciation, but my new chartered accountant told machine hour rate method. Why? Because of true and fair view, better presentation. So, if there is any change in law, any change in AS, or for better presentation of financial statement, can I change accounting policy? Yes. But remember, at the time of change, I am supposed to disclose 4 items. How many items? 4 items. What was the old policy which I was following? What is the new accounting policy which I am following? Why am I doing a change in accounting policy? And what is the impact of change? Old policy, new policy, reason for change, and amount of. Old policy, new policy, reason for change, and amount for change. What is accounting policy? Accounting policies are specific accounting principles and method of applying specific accounting principles. Specific accounting principles means problem. Method of solving those problems are accounting policy. Problem is a principle and method of solving the problem is a policy. Am I clear? Yes. What are the factors you are supposed to keep in mind? Primary, secondary. Primary mein true and fair view. Secondary mein prudence, conservatism. Prudence, substance over form, and materiality. Can we change accounting policy? Yes, you can change accounting policy if there is a change in law, accounting standards, or for better presentation of financial statements. Once you change the accounting policy, you are supposed to disclose 4 items. What was the old policy? What's the new policy? Why did you change the policy? And what is the impact of changing money? Am I clear? Sir, so we understood what is accounting policy, how to select accounting policy. We can change accounting policy. The name of this standard is disclosure of accounting policy. Where we are supposed to disclose? All accounting policies which are significant and material should be disclosed in one place. Any place of financial statement you can disclose. Generally, we disclose it in notes to accounts. Am I clear? So, all significant accounting policies should be disclosed at one place instead of scattered. Am I clear? Yes. Sir, but you told the name of the standard should have been general purpose financial statement. Yes. I told while preparing general purpose financial statements, you should keep 2 things in mind. One is accounting policy and is fundamental accounting assumption. One is accounting policy and the other is fundamental accounting assumption. What is accounting policy? Factors for selecting accounting policy, change of accounting policy, disclosure of accounting policy, this entire area we have studied. Fundamental accounting assumption is fundamental accounting assumptions chartered are GAC. Going concern. What is fundamental accounting assumption? There is an accounting assumption, when is fundamental accounting assumption. I'll give you one dumb example first. A faltu example. The dumb example is one of the students sitting over here, no, he came to classroom. After he came to classroom, I asked him, hey, how did you come? He told, sir, I came by auto. Tell me, chatted honestly, should I ask him? Did you pay that auto wala? Why? He would have paid. This is, I have believed. He would have paid. Assumption. Suppose if I tell you tomorrow the class is at 6 p.m. same time. Do I need to tell you tomorrow the class is at 6 p.m. if I am alive? So there are some implied assumptions which need not be stated. Whenever you talk to your friend, no, you are following implied assumption that you will be alive tomorrow. Those are implied assumptions. Those implied assumptions are known as fundamental accounting assumption. In that, one is going concern. And that is why you say, no, you always assume yourself to be going concern only, no? Okay, see you tomorrow. We are assuming tomorrow you will be alive. So whenever we are preparing financial statements, we always assume business will be there in tomorrow or in near future. Am I clear? If business, we assume that the business is not there tomorrow, then we will not have any asset only, no? Because I told that this benefit yet to be derived. When will I derive? Next year. Next year business only is not there. Then the entire concept of asset will only go. Oh, going concern. Accrual. Accrual means transaction should be recorded at the time of happening and not at the time of payment. Any transaction should be recorded at the time of happening of transaction, not at the time of payment. Purchase of goods. Purchase to creditors. Then you made the payment. Creditors to cash. For cash purchases, then happening and payment is taking place at the same time. Then you can write purchase to creditors, creditors to cash. But you don't want to prepare creditors account. Then you can combine and write purchase to cash. Now listen. Purchase, payment. Suppose both happened on 25th of January. Purchase to creditors, creditors to cash. Two entries you will pass on the same day. Sir, can I combine and pass? Yes. For combining any journal entry, ask two questions. For combining any journal entry, ask two questions. Question number 1. Are both the two entries which you want to combine, is it taking place on the same date? The two entries which you want to combine, is it taking place on the same date? The answer is yes. Then you ask the second question. The account which you want to nullify, do you want to prepare its ledger? You don't want to prepare its ledger. No, I don't want to prepare its ledger. Both the transaction on the same date? Yes. The account which you are nullifying its ledger you want to prepare? No. Then combine. I'll give you must example, you'll understand. Expenses ka journal entry. What is the journal entry? Expenses to cash, PL to expenses. Is this both happening on the same date? Yes. Do you want to prepare expense account? Yes. Can you combine them? You understand? Is both happening on the same date? Yes. Do you want to combine them? Do you want to prepare expense account because expense account will get nullified? Yes, I want to prepare expense account. Then can you combine them? No. Second situation charted in case of dissolution. Remember dissolution you studied? In that expenses ka journal entry, expenses to cash. Then realization account may use to transfer expenses. Both are happening on the same date? Yes. Do you want to prepare expense account? No. Why? Because you prepared partners capital, realization and cash bank account. Did you prepare expense account? No. Expense cut. Can you combine the entry? Yes. And that is why you used to pass the entry realization to cash. You understood this transaction. In normal course of business, Are these transactions taking place on the same date? Yes. You want to prepare expense account? Yes. Can you combine? No. Are these transactions taking place on the same date? Yes. Do you want to prepare expense account? No. Then you can combine? Yes. So now you understood. Tell me honestly, chartered people sitting over here, did you understand when to combine the journal entry and when not to combine? Randomly you cannot combine. It should be both the transactions should be taking place on the same date, and the account which you are nullifying, that account if you don't want to prepare. So what is the journal entry for sales? Debtors to sales, cash to debtors. Is this transaction taking place on the same date? No. So this is taking place on 25th of January and this is taking place on 5th of February. Can you combine them? No. So this becomes credit sales and collection from debtor. This becomes credit sales, this becomes collection from debtors. You cannot combine. Why? Because it is on different dates. This is accrual, this is payment or receipt. Achha. But sir, if they both are on the same date, then you ask, do you want to prepare debtor's account, that party's account from to whomever you sold the goods, do you want to prepare his account? If your policy is to prepare the account, then you will not combine. If your policy is not to prepare, for example, you are a big wholesaler, then you want to keep details of all your customers. Then you will say, no, don't combine, past two entries only. Want to keep details of all your customers. But you are a retail shopkeeper. You don't want to keep details of all your customers. Then you will say, I don't want to keep debtors account, let me combine. Then you will pass the entry cash to sales. Understood. So what are the two conditions to combine a journal entry? Both the transactions of accrual and payment. Both the transaction of occurrence and payment should take place on the same date. And the account which you are nullifying, if you don't want to prepare the ledger of that account, nullifying account ka ledger you don't want to prepare, then chartered you will combine, else you will not. Otherwise, occurrence and payment should always be separate. So you account records first occurrence, then payment. Understood. Sir, wages paid ka entry, again same. Wages to employee, employee to cash. This is accrual. This is payment. Are these happening on the same date? Yes. Do you want to prepare employee's account? Yes. If you prepare employee's account, no, the advantage is outstanding prepaid you can see very clearly. But some people don't want to prepare employee's account. Then they will say, combine. Oh. So some people say wages to employee, employee to cash. Some people say no, directly wages to cash. Why? Because there are two thought processes. Accounting policy, there is a problem. Should we combine or should not we combine? I want to prepare employee's account. Don't combine. I don't want to prepare employee's account. Combine. Am I clear? Yes or no? So in reality, which is more popular? The first one. Don't combine. But in classroom, which is more popular? Combine. Why? You don't want to prepare all this chutu-putu account, no? So you understood going concern. You understood going concern. Fundamental accounting assumptions, GAC. Going concern, accrual and consistency. Consistency I explained you earlier only. Sir, oh sir, going concern, consistency and accrual we have to follow. We cannot follow cash basis of accounting. No. Why? No. Sir, income tax mein to cash basis or accrual basis, whichever SSC wants to feel. Income tax mein this liberty is there. Accounts mein this liberty is not there. Why? So we have to follow accrual basis. Now tell me, chartered, we'll come back to accrual basis in 1 minute. We'll come to know logic of every beautiful thing on this earth. Now tell me, chartered, India follows Contract Act. Bolo haan. Haan sir. Contract Act has to be written or oral? Sir, anything. It can be written also, it can be oral also. For a contract to be valid contract, there has to be a consideration. No consideration, no contract. I'm not talking about exception to the rule. For a contract to be valid contract, there has to be a consideration. Bolo yes or no? Yes, sir. If there is no consideration, there is no contract. Correct? Correct. Now tell me, Chartered, I sold you this duster and you promised me to pay 25,000. You promised me to pay 25,000. You have not paid 25,000. For a contract to be valid contract, consideration should be promised or paid. Sir, consideration should be promised. So you have promised me to pay this 25,000. So it becomes a valid contract? Yes. If you fail to pay me 25,000, can I file a suit against you? Yes. That means the transaction took place as soon as you promised to pay 25. So when you promise to pay 25, it is accrual basis, cash basis? Accrual basis. That's why India follows accrual basis, because we follow Contract Act, and contract works on consideration promised, not consideration received. Hey Swami, you all are understanding, not understanding. It is going inside your head, above your head. Gaya, upar gaya. You tell no. Nobody is telling only. So much theory not required. Did I skip all this logic? Huh? Skip all this logic. Only tell you we should follow GAC. Going concern, accrual, consistent. Going concern is business will be there next year. Arey why? It is implied. Accrual basis, why? Consistency, why? Every why you know also. Why I am telling you? Some places why is required, some places why is not required. Why? Some places why is required because we have question on case study basis. Case study mein you will be able to crack the nut only if you know the why. Sir, you had told, bolo. Sir, you had told that accounting policies should be disclosed in one place. Exactly. Sir, fundamental accounting assumptions? No. They should be disclosed only if not followed. They should be disclosed only if you have not followed. Acha. So, like for example, if you are not following, if you are following going concern, then all assets and liabilities should appear in balance sheet at cost. But if you are not following going concern, your business is to shut down. That means going concern is violated. If going concern is violated, then all your assets and liabilities should appear at market. Oh, so if going concern is followed, we show assets and liabilities at cost. If going concern is not followed, we show assets and liabilities at realizable value. Am I clear? Now Chartered, logically AS1 में इतना ही है. फटाफट let's read it. It is good, no? अच्छा दिख रहा है ना? AS1, disclosure of accounting policy. Financial statement are popularly known as general purpose financial statement, GPFs. It includes balance sheet, PL, cash flow, notes to accounts and statement. For balance sheet and PL, we follow schedule 3. For cash flow, we follow accounting standard 3. GPFs should be prepared keeping in mind two things. Accounting policies are specific accounting principles, and that is problems, and method of applying those principles, the solution to those problems. Issue, solution. These solutions are accounting. Factors to be considered while selecting account: true and fair view, prudence, substance over form, materiality. All significant policies should be disclosed. Can accounting policy change? Yes. Old policy, new policy, reason for change, impact. Fundamental accounting assumption, going concern, accrual, consistency. Now question number 1. Now, in the books of Prashant Limited, closing stock as on 31st of March 15 amounts to rupees 1,63,000. ठीक है? On FIFO basis. On which basis? FIFO basis. the company decides to change from FIFO method to weighted average method. अच्छा, from FIFO to weighted average. ठीक है. For ascertaining cost of inventory for 1450. 1415 में on the FIFO basis they have valued 1,63,000. They want to change the method to FIFO. For ascertaining the cost of inventory on the basis of weighted average, method of closing inventory is 147. They used to follow which method? FIFO. Now they are following which method? Weighted average. FIFO mein what was the value of inventory? 1,60,000. Weighted average mein what is the value of inventory? Realizable value is 195. So it should be valued at cost or NRV, whichever is lower. So in FIFO I would have valued at 163. In weighted average I will value at 147. What is the difference between 163 and 147? 16,000. Now charted. That means old policy was FIFO, new policy is weighted average method. Why did they change the policy? That is not given. So we'll assume they have changed the accounting policy for better presentation. What is the impact of change? My closing stock will reduce by 16,000 if my closing stock reduces. If you remember trading account, closing stock comes on the credit side of trading account. If closing stock reduces by 16,000, my trading account credit side will reduce by 16,000, yes or no? Yes. If my trading account credit side will reduce by 16,000 chartered, income profit will go up, come down. Bolo bolo. If my closing stock reduces by 16,000, my profit will go up, come down. Correct, Neela? But what about profit? Closing stock comes in trading account credit side. Credit side will decrease by 16,000. Credit side is income side. If income side reduces by 15,000, what will happen to my profit? Such a big hint I have given. Correct, Jairam. Come down, Khushi. Very good. Mukesh, profit down. Very good. So profit will come down. What will happen to my balance sheet? So balance sheet, my asset will also come down. Now let's see how to write the answer. Correct? Now, solution to question 1. The above case or situation relates to case 1 disclosure of accounting policies. Correct? Then as per the provisions of AS1, it is regarding the change in accounting policy. So we are supposed to write the entire provisions of change in accounting policy. Any change in accounting, any change in accounting policy which has a material impact then it should disclose the facts in notes to accounts of general purpose financial statement. If the change is quantifiable, then company should disclose the amount by which the profit of the company impacted or should disclose the amount by which the profit of the company will be impacted or impact of the change in financial organization. Correct. Now charted. So this is all about that if there is a change, it has to be disclosed, and if it can be quantified should be disclosed by how much profit will be impacted, by how much financial position will be impacted. In the instant case, Prashant Limited is changing the method of valuation of inventory from FIFO method to VAM. Correct? For which it should disclose old policy, old policy, FIFO, new policy, new policy, weighted average method, then reason for change, for better presentation of financial statement. Amount of change. Old value 1,63,000. New value 1,47,000. Decrease rupees 60,000. Impact of change. Impact of change. A, profit. This is the symbol of profit which I'll use in the class, pi. Profit will decrease. Profit will decrease by rupees 16,000. B, asset will also decrease by 16,000. Now what to do? Chale. Everybody's copied? Question 2. X sold its building to Mini Limited for 60 lakhs. Oh, X Limited sold its building to Mini Limited for 60 lakhs on 30th September 2010. Okay. Gave possession of the property to Mini Limited. However, documentation and legal formalities are pending. Due to this, the company has not recorded the sale and has shown the amount received as advance. The book value of the building is 25 lakhs as on 31st of March 2011. Do you agree with this treatment? Do you agree with this treatment? If you do not agree, explain the reason. Tell me, chartered, do you agree that he should show the sale and book the profit, or he should wait? That means what happened? I sold the property to you. You gave me money also. But legal formalities are not done. So you took the possession, you gave me the money. You took the possession, you gave me the money, 25 lakhs ka property, I sold it to you for 60 lakhs. Profit 35 lakhs. So chartered, on 30th September, don't write this, on 30th September, as a person who sold the property, he passed the entry cash to advance. 60 lakhs, 60 lakhs. What do you think? He should have passed this entry, or he should have passed the entry cash 60 to profit 35 to land 25. Building, sorry. To building 25. So he should follow option 1 or option 2. I have received the money. I have given the possession. But the legal formalities are pending. Follow. Wonderful, Jairam. Option 1, option 2, option 1, option 2, option 2. There are 2 people who told me option 1. And there are option 2. Option 2. Substance over form. True and fair view. I have taken the property, I have started using it, I have paid the money. The legal formalities will take later on. Legality is more important, reality is more important. In my example which I had given you, in that I have not paid money also. I just done puja and started staying. Then also I told substance over form, you will show the property in your books. You remember? Yes. So 3 parts we are writing the answer. Part 1 title, part 2 provision, part 2 conclusion. So chartered, इसमें भी we'll write the first point same. Very good. So many people have given 2. Correct. As per provisions of AS1, the main consideration so now you understood what is the accounting principle over here, whether to record asset or not to record asset. What is the policy? To be shown the profit, to not to be shown the profit, to show the profit. Correct? So accounting policy is to show the profit based on what? Substance over form. Understood, no? Now, the main consideration of the the main considerations for selection of accounting policy is presentation of true and fair view of financial statements and the accounting policy should follow prudence, substance, over form. Prudence, substance, over form, and in the instant case, economic reality and substance of is that the rights and beneficial interest in the property has been transferred. Although legal title has not been transferred. This is known as facts of the case. So first is title, second is provision, third is in the instant case, facts of the case, and last is conclusion. Hence, X Limited in its financial statement for year ended 31st of March 2011 should record sale and recognize profit of 35 lakh in its PL and building should be de-recognized. De-recognized from balance sheet. Correct. Therefore, treatment given by company is not correct. Yes, no. You understood. Correct. So now you would write in few chapters some answers, so you get a nag of it. Then I will just discuss the answers and leave it. So, but you should get to know how to write the answers in exam. Correct? No? Now. Now chartered. State whether the following statements are true or false. Also give reasons for your answer. Certain fundamental accounting assumption underlying the preparation of presentation of financial statement, they are usually specifically stated. The fundamental accounting assumptions, they are usually specifically stated. True or false? Fundamental accounting assumptions, they are usually specifically stated. True or false? Kaiku, Jairam. Correct. They are, this is false. They should be specifically stated only if they are not followed. Correct. If fundamental accounting assumptions are not followed in the presentation, fundamental accounting assumptions are not followed, disclosure is not required. False. Disclosure is required. All significant all significant accounting policies adopted in the preparation and presentation of financial statement should form a part of financial statement. True. Sorry. Where it should be disclosed in one place. Any change in accounting policy, which has a material effect should be disclosed, where the amount by which the given item in the financial statement is affected by such change is not ascertainable. Wholly or in part, the fact not to be indicated. Point number 4. Any change in accounting policy which has a material effect should be disclosed, where the amount by which any item in the financial statement is affected by such change is not ascertainable. Wholly or in part, the fact need not be indicated. Hey Baba, false. The fact need to be indicated. The fact need to be indicated. No, 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 no. There is no single list of accounting policies which are applicable to all circumstances. True. So, whenever we are in a situation where we don't have a solution, then we'll go back to what? We'll go back to the individual standards. If we don't get the individual standard answer, then we come back to AS1 and framework of accounting standards. From there, we have to find out the answer. Am I clear? Yes, sir. Now charted. Now charted. Summarized balance sheet of cloth trader on 31st of March 2017. Summarized balance sheet of cloth trader on 31st of March 2017 is given below. Proprietor's capital, profit and loss account, 10% loan account, sundry creditors, fixed assets, closing stock, sundry debtors, deferred expenses, cash and bank balance. Okay. The additional information is given. The remaining life of fixed asset is 8 years. The pattern of use of fixed asset is even. Even matlab equal. The net realizable fixed value of fixed asset 31st of March 18. Charted the balance sheet cut date is 31st of March 17 and they have given that realizable value on 31st of March is 3,25,000. Correct hai? Haan. Purchase and sales in 2017-18 amounted to rupees 22,50,000 and 27,50,000. ठीक है. The cost and net realizable value of stock on 31st of March is 2 lakh and 2,50,000. ये भी ठीक है. Expenses for the year amounted to 78,000. भी ठीक है. Deferred expenses are amortized equally over 5 years. ठीक है. Sundry debtors on 31st of March of 1,50,000 out of which 5,000 is doubtful. Collection of another 25,000 depends on successful reinstallation of a certain product supplied to the customer. That means 5,000 the provision is there. 25,000 if we do not install, if we do not reinstall a certain product, if we do not reinstall a certain product, तो 25,000 भी गया. Otherwise 25,000 will be recoverable. Closing creditors are 75,000 likely to be settled at 10% discount. Cash balance is 4,22,000. There is an early prepayment penalty of loan of 25. If we repay the loan early, then there will be a penalty. We are required to prepare assuming not going concern. Oh my God. Assuming not going concern, that means all assets and liabilities at that means chartered we are supposed to prepare trading and PL and balance sheet assuming the business will not run. Chale? Solution to question 4. You are working on an assumption that going concern is not followed, therefore all assets and liabilities will appear at fair value. Are you ready with the format? May I start? The moment you give me a green signal, I will be through. Arey chartered. Drawing done. I assume yes. Now, proprietor's capital account 3 lakh. No change in that. Proprietor's capital account 3 lakhs. Correct? Yes. Now, after that, profit and loss account 1,25,000. This profit and loss account means current year ka profit or past accumulated profit. Current year ka profit or past accumulated profit. Profit and loss account means current year ka profit or past accumulated profit. This is reserves and surplus, so it is past accumulated profits. Yes sir, no sir. Now, thereafter, 10% loan 2,10,000. Now chartered understand, 10% loan 2,10,000. Correct? Yes sir. So we are paying on we'll repay this loan. So we will show 10% loan 2,10,000 or we will prepay this loan. If we prepay this loan chartered, we will prepay, then you have to pay penalty also of how much? 25,000. Because we are assuming that we have shut down. That means we will not repay only 2,10,000, but we will repay 2,10,000 plus penalty of 25. That is how much? 2,35,000. Correct? And this penalty is an expense, so it will come in PL also. If anybody has any doubts, correct, we are paying the loan today, we will repay the loan earlier because we are shutting down the firm. If we repay the loan earlier, then chartered, we are supposed to pay a penalty of 25,000 and that penalty of 25,000 will be treated as an expense. समझा? Next. Sorry, penalty is only 35. Hey, chartered TV wala chartered, you are understanding? No. If I make mistake, you will be able to tell. Creditors 50,000. Tell me how much creditors will write. So first of all, tell me, when are we preparing this balance sheet? We are preparing this balance sheet as on 31st of March 2018. 25,000 penalty. Oh my God. Thank you. If you don't tell me, no, I will keep on doing such mistakes only. Now chartered, tell me, creditors, how much we will show? Creditors. Creditors. Correct, Jayaraman? No, I will show 75 because it is given in the question that creditors are 75 likely to be settled at a discount of 10%. Yes, we will settle only. We will get a discount. That is 67,000. 67,500. And by discount on creditors 7,500. Correct. Now, credit is also done. Fixed assets 3,60,000. Fixed assets is 3,60,000. We'll show depreciation. It will still run for 8 years. So will we show depreciation as per 8 years? Or today's value, market price is how much? 3,25,000. So will we show depreciation by dividing by 8 years, or will show 3,25,000 only? 3,25,000. So we will show depreciation of how much? 3,60,000 asset will become 3,25,000. Its realizable value. So depreciation balancing figure 35,000. Now charted again, I tell you, this 360 is given, this 325 is given. So this 35,000 is a balancing figure. Because since we are not following going concern, asset should be shown at realizable value. Asset should be shown at realizable value. For this depreciation, this depreciation 35,000. Correct? Thereafter, closing stock is 150. We have done adjustment 1, 9, 7. Now debtors is closing stock 1,50,000. We will show it at which value? Over here it is given. Point adjustment number 3 mein. The cost and net realizable value is 2 lakh and 2,50,000. Tell me, I will show closing stock. Closing stock. Trading account credit side and balance sheet asset. I will show it at 2 lakh or 2,50,000. 2 lakh or 2,50,000. 2,50,000. Why? All assets at market value. Don't say whichever is lower. All assets at market value. Thereafter charted. So we have done adjustment number 3. Then debtors 1 lakh. 5,000 is doubtful and collection of another 25,000 depends upon successful reinstallation. So we will show debtors 1,50,000. Provision for doubtful debts will show how much? Provision for doubtful debts will show how much? 30,000. 1,20,000. Why 30,000? By 5,000 the provision was there only. And when you are shutting down the organization, will you reinstall anything? No. So another 25,000 you will not get. When you are shutting down the organization, will you reinstall? No. If you don't reinstall, you will not get anything. Correct? Now, so 2 provision for doubtful debts, 5 plus 25, 30,000. 5 plus 25, 30,000. Now, now chartered. So we have done adjustment number 6. Debtors also. Deferred expenditure is 50. According to adjustment, it should be amortized over 5 years. What do you think? Over 5 years we will amortize? Sir, 5 years only we don't have. So what will you do? Transfer it to P&L. Correct. 2. Deferred expenses 50,000. Cash and bank, that is directly given, 4,22,000. Cash and bank 4,22,000. All at 31st of March 18 का value is given. Correct? 1 is done. 2 में purchase is 2250, sale is 2750. Opening stock, last year का closing stock, this is 31st March का closing stock. So it will become current year का opening stock. To opening stock, how much? To purchases, 22,50,000. Now charted. Then by sales, 27,50,000 sales. So adjustment 2 हो गया 3. 4 is what? Expenses. That is the last adjustment. 78. चलो फटाफट. To gross profit. Chalo, calculate gross profit and tell. How much? Gross profit 6 lakhs. Now PDD adjustment they have given that 5,000 is PDD plus extra 25,000 I will not receive until and unless I successfully reinstall. Suppose I have a customer, I have installed a product, that product is defective. He tells me, Dipesh, if you reinstall the product on then only balance 25,000 I will give you, otherwise I will not give you. That means in the question it is stated, collection of another 25,000 depends on successful reinstallation. That means first installation was not done correctly. So our customer is telling, if you reinstall it correctly, then only I'll give you 25,000. Now I am shutting down the business. Will I reinstall that product, Priyanka? I am shutting down the business. Do you feel that I will reinstall that product? Reply. You will reinstall the product when you are shutting down the business. No, we assume that we will not reinstall the product because we are shutting down the business and hence this 25,000 also we will not receive. Understood? Since we are shutting down the business, we will not reinstall the defective product and hence we will not receive this 35,000 rupees. 25,000 also. Great. Now chartered. Correct. Now you find out the net. So this is 78,000 expense. Now you find out the net profit. Three lakh 89,500. Net profit that will become what is that total? No. What is that? Cap 5 lakh 14, no?
Sir,
Done. Tell me the balance sheet total. 11 lakh 17,000. Correct? Now, there are two questions. Jagannath made a right issue of shares. You know what is right issue? It is a fresh issue of equity shares to the existing shareholders only. In offer document to its member, it had projected a surplus of 40 crores. In an offer document to its members, it had projected a surplus of 40 crores during the accounting year end on 31st of March. ठीक है. The draft results for the year prepared thereto followed accounting policies and presented for perusal of the board of directors showed a deficit of 10 crores. Oh my God. The board, in consultation with the managing director, decided the following. Value year-on-year inventory at works cost 50 crores instead of the year 2 method of valuation of inventory at 5 crores at 30 crores. My profit will shoot up. Now, and provide permanent decrease in the value of investment which had taken place over the 5 years, and the amount of provision is 10 crores. The chief accountant of the company, you are asked the managing director to draft the notes to accounts. Now chartered, they were projecting a surplus of 40, they got a deficit of 10. Correct? So what did they want to do? They were valuing it at factory cost. Now they are wanting it to value at prime cost. Prime cost, factory cost, you will understand after you do costing, cost accounting. But presently you remember these are two. This is factory and this is before factory, only on the basis of material. This is including factory expenses, this is excluding factory expenses. Now, and permanent diminution. Diminution means decrease. As a chief accountant, you are asked by the managing director to draft notes to account. As per any change in the accounting policy which has a material effect for the current period or which has now valued at factory cost against the practice of valuing it at prime cost as it was practiced till last year. Now, till last year, they were valuing it at prime cost. Now they want to value it at works cost. While if they value at works cost, their profit will increase. Value of closing stock will increase. As a result, the profit inventory has been valued at 50 crores and the profit will be increased by 20 crores. So the first notes I will say that it is against the policy of the company to value inventory at works cost now, because till last year their practice was to value at prime cost and there is no reason for changing. Their accounting policy was to value at prime cost, but they suddenly changed it to works cost. Why did they change it? I don't know. Is it allowed? No. But because of due to change the value of the profit has gone up by 20 crores. That I have written. The company has decided to provide 10 crores for permanent diminution in the value of investment which had taken place over a period of 5 years. The provision has been reduced. There is a decrease in the value of investment and they have shown it at 10 crores, because of which every little decrease was there, but they were not showing. That means, suppose there was an investment of 10, it became 9, we did not show, it became 8, we did not show, it became 6.5, we did not show, it became 5, we did not show, it became 4, now we think enough. So 6 rupees ka decrease we want to show together. Allowed, disallowed? Allowed. Am I clear? Yes or no? Why? Conservatism. So there were two theoretical questions, those answers are given. These are two institute material questions. Please go through them nicely. One I have discussed, one you discuss. One is based on accrual basis, the other I have discussed where it was very clearly stated there were two changes. One is change in the value of inventory and the other is decrease in the value of invested. Change in the value of inventory is allowed? No. Why? Because they don't have any reason for changing the method of valuation. But yes, because of the change in the valuation of method, inventory of 30 crores will become 50 crores and profit will shoot up by 20 crores. and decrease in the value of investment which they had not provided in last 5 years, can they provide it over here? Yes. Why? Conservatism principle. Am I clear? With that charted, we come to end of AS1. I am still not perfectly well, so I will stop the class here. Tomorrow we will start fresh with AS2. Am I clear? Bye bye. Take care. We are done with AS1 also. Tomorrow it is AS2, which is practical now, and I don't think so it will get over tomorrow. It will take some time. Bye bye, chartered. Bye, Jaraman. Thank you. Super. Bye bye. Bye bye.